I don't know if we use that term or if I subscribe to that term. I will say, again, in 2014 and 15, when we started investing in earnest at this intersection, and I describe this intersection as three things broadly. One is leveraging all of the fantastic and really beautiful advancements and maturations across molecular bio and biochem. And that includes the Moore's law, like decreasing costs of sequencing and synthesizing, but then also the increasing fidelity and precision of various toolkits like CRISPR-Cas9 or DNA encoded mechanisms to essentially make high throughput various assays that historically weren't. It leverages the life sciences and the biology. It couples them with automation to create data at a size and scale that becomes redundant beyond the stochastic noise inherent in biology and chemistry. And then on top of that, it couples and integrates both blocking and tackling software, blocking and tackling data science, but then also cutting edge machine learning and AI. And oftentimes that last bit, the cutting edge machine learning and AI, gets a lot of the attention. It grabs the headlines, but it's really the entire, it's really almost the icing on the cake. This domain is only interesting because we're at a moment in time where we can integrate across the life sciences, across the automation stack, across, frankly, the software stack, and then finally across all of that, apply layers of data science, machine learning, and AI. And so maybe that's what TechBio means. When we started investing in earnest a few years back, two interesting things happened. One, the traditional biotech investors, largely on the East Coast in Cambridge or in Boston, scoffed, quite frankly, at what we were doing. They'd been burned in the past. In the 90s and early 2000s, there were attempts to throw supercomputers at either protein folding or at chemistry with CombiChem. And those had largely failed. And so I think there was a little bit of historical scar tissue, which had culturally manifested a reticence to be open-minded about how technology was evolving. So there was scoffing from the East Coast biotech funds. And then there was somewhere between a lack of interest to a, oh, this is just too complex and there's more money to be made in enterprise SaaS and consumer software from the vast majority of the Silicon Valley firms. So we really did find ourselves in no man's land for a few years. And looking back, I think, the 2014 through 2018 investing that we did in this space is going to be historically good because there was very little competition from at least the venture perspective, and because the sciences and the technologies were so ripe. Over time now, I can tell you, every week we have firms from, the biotech firms from the East Coast and the technology firms from Sandhill approaching us saying, for the biotech firms, hey, tell us about technology and machine learning and how are you building these companies? How do the underlying kind of core KPIs change, and how should we assemble our management teams to take advantage of software and machine learning? And then we have the Valley firms approaching us saying they want to get more exposure and they have increasing appetite and interest to invest in biotech or tech bio, but they're not sure if they have the understanding and the wherewithal to really understand how to build businesses there. And so I don't say it facetiously, and certainly not in a pejorative way, but I think we have budding partners on both sides now, which is really exciting. I think it's a fantastic time to be an entrepreneur now, because almost every venture firm is interested and excited and at least experimenting in this space. And it's and maybe using increasing excitement from early stage technology VCs is a good proxy for that transition from biotech to tech bio.